And engineering sector is going to need to reinforce itself this year. The Steel and Engineering Industries Federation of SA has released its State of the Sector report, and I'm afraid it doesn't make for good reading. Let's bring into the conversation CIFSA COO Tafadzwa Chibanguza joining us this morning. Tafadzwa, hello to you. Good to have you with us. So when I see contractions of 2.2% in 2023, it doesn't make for pretty reading. What's going on?
Good morning, Gareth. Thanks for having us. Appreciate it. I'll just start with saying that 2.2% contraction is our base case with a considerable downside risks. Just want to start off there. And really what it is a toxic mix of a weaker global economic environment. The sector exports about 40% of its sales. And of that, 40% of that goes into Africa, sub-Saharan Africa. And in the weaker global economic environment, we do anticipate that a lot of the countries that we supply into, where financing costs are getting tighter, they become fiscally vulnerable. That has a dampening effect on demand. So that's on the external side. And then on the internal side, all the sectors that we supply into, namely construction, the mining sector, autos, petrochem, agriculture, have all come out with statements highlighting quite a difficult year ahead, predominantly with the energy crisis being a risk factor to their outlook. So the combination of those internal demand and supply side factors are really what are making us flag that number.
Yeah, so once we move past the local factors as well, which is going to be nearly impossible for the next 12 to 18 months for the blackouts, even though we might be getting a new Minister of Electricity, whenever that might be, I suppose the impact on global demand has been a problem because China, as we know, has not exactly been opening up at the rate that I think many people were expecting to. How much of an effect has China had on our operations?
You make a good point. You know, China is the second largest economy in the world and what you could call the manufacturing hub of the world. So disruptions in that economy have worldwide ramifications. One, from a demand, because for them to manufacture, they import a lot from ourselves. In fact, Asia represents the second largest economy that we export to after Africa, another 20-something odd percent. I think it's 24%. So a slowdown in that region, again, puts pressure. In fact, an interesting stat that came out last week that at 3% that the economy grew at in 2022 is the first time in 40 years that economy has grown at less than the global average. So this just shows you the impact of those lockdowns. But the encouraging signs, of course, is that it is opening up into 2023. In fact, I think the China growth rate estimate by the IMF is about 5.3% from 3% last year. So there are positive signs in that sense. But how it then comes back to us is that trade with China would be seaborne. And in there, we then have to factor in Transnet's ability to get our product in and out of China. And in this forecast that we've put, the 2.2, we do make quite some punitive assumptions on Transnet's ability to facilitate that internal and external trade.
I mean, if you look back as well, we've got to go back to Q4 and Q3 of 2022 as well. I see the steel price dropping to negative 3.36%. And then ArcelorMittal, this was early or late Jan, wasn't it? ArcelorMittal reporting numbers in the red as well. And I suppose a lot of that's got to do with the factors you're talking about. So steel price is down, demand is down, export is down. Is there any light at the end of the tunnel?
Honestly, in this year, Gareth, so you are correct on the stats that you've mentioned. And also it's important maybe to highlight the fact that steel prices, as if you had to look at them as an indicator, softer, well, I'll put it this way. Steel and economic growth are highly correlated. So in instances where you have slower growth, you have steel prices come off because demand is down, right? So that's also an extension that we can read into those steel prices coming down. To the second part about is there anything we can look to in terms of any silver linings? At this point, where the country is what we need is reform. There are signs of the state looking at ways and means to unlock the economy, but I think that can be done a lot more faster. And if that was done a lot more faster with private sector assisting the state and given quite a strong role in that area, that's definitely something we could call as a green light for the economy. But until that happens, Gareth, we really find ourselves in a very, very difficult situation. And I just want to stress that point again, where I said that 2.2% base case has considerable downside risk. Because of all these factors.
Structural recession over the past couple of quarters and periods as well. Looks like it might not change. And Tafadzwa, you took my last question out of my mouth. I was about to ask you about what government can do in the private sector, but you've answered that beautifully. So I'll say goodbye to you for the moment and appreciate your insight. Not going to be a great year, I'm afraid, for the metals and steel sector. My thanks to the Steel and Engineering Industries Federation of SA COO, Tafadzwa Chibanguza, joining us here on eNCA.